Hi friends, warm welcome back to Nix Academy, and we are going to continue with illustration 9. Here we can see Ahmed does not keep proper books of accounts. We have to find the profit and loss made by him for the year ended 31st March 2018. So it is very clear that it is a problem where the books have not been maintained. That is, we have to find out certain missing parts and then compile the accounts. So if you see the question, the first line is bank balance is given 14,000 in credit, 18,000 in debit, cash in hand, stock, debtors, plant, furniture and creditors. Now, Ahmed has withdrawn 40,000 for his personal use and he has introduced 16,000 as capital for expansion of his business, and a provision of 5% on debtors is to be made. Plant is to be depreciated at 10%. So this is the question. So we are going to find out from this the profit and loss made by him. So what do we do generally? When we need to find the profit and loss, we compare the capital, that is the opening capital and the closing capital. So whatever is going to be the difference, that is going to be the profit which is added during the year. And we, because the books are not going to be maintained in double entry system, we are going to use this method. So let's frame, see if you can see over here, this year is 1/4/2017, right? And this is 31/3/18. So this is nothing but the opening balances for this year. So the year ended is what? 31st March. You can see over here in the question it is given 31st March. So 31st March the year ended, and 1st April 2017 is the opening balances. So we find the opening capital from here, we find the closing capital from here, and the difference of this is going to be profit made during the year. So let's solve this out. Now, what is peculiar in this question is that you can see over here the bank balance is given as credit over here, and it is going to be mentioned as debit over here. So that is the only peculiar part in this question, because how can bank balance be credit? See, what happens in the beginning, I think class 11 students will be very sure with this right now, that all the assets are going to be debit balances and all your liabilities are going to be credit balances. So that means this bank balance is a credit balance, and that means it's a loan, it's a overdraft facility mostly. Okay, so that means this bank balance is a credit balance, it's an overdraft. Whereas on closing 31st March 18,000, it's a debit balance. That means that will be on the asset side. I will repeat this once again if you have not understood. See, the bank balance should always be a debit balance because bank is an asset, right? It should be a debit balance. When they have mentioned that the bank balance is a credit, that means it is a loan which is availed. That is why it is a negative balance or it is a credit balance, and it is a credit balance. So what do I say? It is an overdraft facility which they have opted, and that is the balance which is mentioned the opening side, which is 14,000 credit. Now with this we will do the statement of affairs for 31st March 2017 as well as for 31st March 2018. Okay, we are simply going to bring in the figures which are mentioned over there. So from there you can see we will take 14,000 credit towards the liability side, 14,000, then creditors 60,000, cash in hand 800, stock 12,000, debtors 34,000, and plant 80,000, furniture 40,000. So the total is 1,66,800, and on the debit side it is 14,000 plus 60,000, so 74,000. So 166,800 minus 74,000 is going to be 92,800. This will be the balancing figure or the capital. So this will be termed as the opening capital for this problem. Now we will calculate the closing capital by again preparing the statement of affairs for 31st March 2018. So we have the bank balances 18,000, cash in hand, stock. In the question, if you see, they have given some adjustments where they have asked you to maintain what? 5%. Over here you can see 5% on debtors provision is to be made, and plant is to be depreciated at 10%. So we'll apply these adjustments over here. So debtors 30,000 is there, we'll subtract 5%, that is the provision for doubtful debts, so that comes to 1,500, and your debtors will become 28,500. And then you are going to depreciate your plant 80,000 at 10%. We will calculate the depreciation, which comes to 8,000 rupees. So 80,000 minus 8,000, 72,000 will be the plant balance. And then we have furniture of 40,000. They have not mentioned in depreciation, so we'll take the same value. and then creditors is going to be 72,000. So the balancing figure arrived is going to be 1,04,000. So that is nothing but 1,76,000 minus 72,000. You are going to get a capital of 1,04,000. So with this becomes the closing capital. We will apply the same format which we did previously. From the closing capital, that is 1,04,000, we will add the drawings made during the year. This is going to be the reverse working. Earlier the drawings would have subtracted, so your capital would have come down, profits would have been added, so your capital would have increased. But now since we are to arrive at the opening capital, we will always do a reverse working. So same way over here, the closing capital is 1,04,000. We will add drawings of 40,000 and then we'll subtract additional capital introduced during the year 16,000. So we arrive at 1,28,000. We have already found out the opening capital is 92,800. So the difference of these two will be nothing but the profit made during the year, which comes to 35,200. I think the question is very simple. Only twist over here was the credit balances of the bank, which many students might ignore while doing the problem. Okay, so you have to ensure that the balance is debit means you will take it to asset. If the balance is credit means you will take it to liability. Don't interchange and work out the problem. You will land up at the wrong answer.